Good morning, good morning, good morning. Happy Friday, everyone. We're starting it off with Dixie on a daily time frame. Yesterday, we got a very deep sell-off into oversold conditions, and we're already coming to test into that breakdown area. Today's name of the game is to get at least a daily close above $1. 101 would be ideal, but this is also a place where you could get a dead cat bounce rejection for a deeper low. But yeah, the consolidation of the low has begun, and it's in basically just a little bit under $100. But today, where the close occurs is going to matter. If you go to the weekly, which I was telling you guys about yesterday's video, you can see we came and tested the 200 exactly where we were looking for, which was at 99.50-ish, and we're getting that bounce back today. You still have to wait for the close to see if we're going to close under this $200 EMA, 200 EMA or not, and if so, we can look for that next target of 96.60, probably 96.50. It'll go up a little bit before the new candle opens. But that's what we're looking for on the weekly is if we can close here, we can look for sideways and up next week. Or if we close under it, then the 200 can flip into resistance and we could look for support much deeper into the channel's bottom. And all of this was to be expected. The biggest surprise was losing the 101. I mean, if this was a liquidity grab to the 200, and we should be looking for a quick, fast reversal from here. And keep in mind that if that is in fact what's going to happen, then the highs of Bitcoin ETH and everything will be put in now. And as this pulls back, you will see deep, deep dives on Bitcoin ETH because the liquidity to the top side got grabbed. And we're going to actually look at that right now because if we remember correctly, we were looking for 31,500 on Bitcoin to be broken with the 4-hour open and close above it for us to look for continuation. Yesterday, we got one candle above it and then immediately rejecting right after that. And as you can see, we were holding this golden pocket fib at 30,100 for a very, very long time. We've now tested into the 31.5 rejection area, which is the mid of the channel. If we cannot close above this 31,000 and let's say 31,100 today, then I would be very, very, very cautious for a deep, deep retrace coming in. We have bearish divergence right now, and that's what we were looking at yesterday as well, but it's actually going to play out now due to the fact that the liquidity to the top side is grabbed. So this was the best area for the shorts, the swing failure pattern of this mid test of the channel. Now we can come back, test into support, and then look for sideways and up again. So right now, this little BART formation, kind of similar to this right now, is what is occurring. We went through this stage, now we're in this stage right here, looking for the resistance. So how high it wants to go, we can see. But today, if that daily close doesn't come above 31,100, I will be looking for the weekend to come and sweep into this golden pocket, liquidity pocket over there. So let's leave it at that. Let me go to the 4-hour. In the 4-hour, you can see that we've already come off oversold conditions. After that, I'd like to see the 21 get tested. We're kind of sitting right above the volume area high as well as the 21 EMA until we lose this 31,040. I'm not looking for us to come test into 30,500, but 30,500, 30,600 is the next natural target after the 21 gets tapped from this oversold condition. So be aware of that right now the point of control over here is where everything is trying to magnet price action to, and that's about 30,600. So that's the area to stay above to look for continuation upside into the end of the week. And yeah, even if you can hold above 31,000, that's even better. But I'll give you 30,600 as a nice layer of support from here. Full disclosure, I am short and I'm going to hold my short until we can break above the previous day high and have a 4-hour open and close above it. Until then, this range between the orange and the red is what I've been playing with. And the POC right here in the middle is what I've been using as my support resistance. You know, like once above it, it's support. Once under it, I'm using it as shorts for resistance, etc., etc., etc. Right now we're above it, so I have to technically use it as support. And the 21 EMA is doing a good foreshadowing of where I should be looking for that support as it is on a 4-hour anyway. So be aware of that right now. I'm going to go to the daily on ETH and give you a quick peek of that. And then I'm going to get out of here because today is Friday and I have a busy, busy day. But I'm always going to be available for you guys on the Discord if you need me. So feel free to hit me up there. Going to ETH, we went right to the $2,020 area, rejected right off of that. I mean, we knew that that area was important to break because we've had a rejection over here already. The second time, I wouldn't look for this rejection. I would have actually preferred it to get to that 20,080 for the rejection, because that way you know 100% that the shorters are going to continue shorting because the golden pocket is being defended. And we'll be looking for liquidity downside, which is right here between this green and blue EMA, which is 1700 and I think that's 1800. So between 1710 and 1800 is where I would be looking for that support bounce. And technically, we've already tested to the bottom over here at the 1714. So I'll be looking for that next long opportunity around 1810 if we get that opportunity. I'll look around 18 to that 200, which is around 1750, 1760 to around 1800 would be that like $40 range that I would like to accumulate along. That's what this green vertical line is. It's to measure move. If you would have got this long, which I scalped it right away, I didn't hold it until we actually got above the 200. But anyone who got this long, your ideal area to take profit would be this golden pocket. And if you're shorting this golden pocket, the ideal place for you to take your profit on that long is between this 1800 and 1714. I'm going to remove 1714 now because we've already did our little poke into it. So the next support bounce will probably be over here where we put in a higher low, and it'll be in this vicinity that I'm looking for it, and then I'll be looking for that long for the upside. If you can see, it's making a little triangle over here. See this little triangle? This little triangle is what I would like to accumulate if I can get a dip into this level. Green. If I could get a dip into this level, I would entertain scalping along, and then my stop loss would be this horizontal, vertical, whatever trend line of the bottom of this channel in orange that I have drawn out as it is. So if I take this long, I would probably have a stop loss underneath like maybe 1710, because you don't want to play around with this fib. Once we lose it again, it will make it itself the resistance for us to dig deep into this triangle where I've been waiting for this 1540 for a while. We don't know if we're going to get it, but if that happens, then we'll know that, hey, it's because we rejected this golden pocket, and the upside is less likely. Path of least resistance will be to the downside. So if I take this long here and I stop out here, the next time I will take the next long will be all the way down over here. I wouldn't entertain this middle area. I would wait for this area to come into this little block from 1714 to this bottom white dash line of 1550, and that $200 range I would try to entertain, and maybe around 1630 I would be entertaining the starting of my long, the swing failure pattern of this, and then I'll add into this midline of the triangle if it actually does push into this because of like low liquidity situations. If we're getting pushed down, I'll be ready to attack it at that level. So that's basically all I'm looking for on the daily. Let me go to a 4-hour real quick and we'll get you out of here. So 4 hours actually consolidating above. This is the bullish bull flag triangle consolidation. It's not going to be bearish until you get a 4-hour open and close underneath 1960, 1950. So be careful shorting in the overbought condition. But usually when you get that break back into the 70 of the RSI, the next move would be coming to the 21 EMA, which is about 1925. So there, in my opinion, right now, if you get a long from 1930, 1940, I would entertain a long scalp with a stop loss underneath like 1900. But this right here, in any normal scenario, I would be shorting it because of the fact that we came off overbought conditions and we're coming to break back in. The risk of us not breaking back in is a green candle going straight up to this golden pocket. So if you're shorting this tight consolidation between these two EMAs, you should have a stop loss right above 2015. Meaning if you get a quick green candle when New York opens straight up into this, you'll get stopped out and you could reattempt the short at the golden pocket, which is the highest risk to reward for your short. Your stop loss would be a little bit above the golden pocket, but that golden pocket is your entry, like ideal entry. That's a professional short right there is what's going to happen. So be aware of that, guys. If you guys have any questions or concerns, leave it in the comment section below. If there are other assets you want me to cover, leave it in the comment section below and I'll get you in the next one. If you are interested in trading with me live, feel free to join us on the Discord server. The link to the server is in the description of this video below, alongside all the other affiliate services that I use and recommend that help this channel grow. So thank you so much. And yeah, please just leave a like, subscribe, press the bell button for notifications if you haven't already, so you get this video when it comes out. And other than that, I hope you guys have a safe, great weekend. Have a great day. Talk to you guys soon. Bye-bye.